In a recent video of mine, I told you to mark your calendars for August 31st because of the Apple and Tesla stock split. And boy, it did not disappoint. Both stocks hit a new high, and on top of that, the S&P 500 and NASDAQ 100 hit record levels. What's going on, Moon Gang? I hope you're having a great day. My name is Matt, and in this video, I'll be discussing what happened in the aftermath of the Apple and Tesla stock split. Then I'll be breaking down what I'm personally looking for next from both a fundamental and technical perspective. If you enjoy this type of stock market related content and want to be in a community of awesome people, join the Moon Gang by hitting the subscribe button. And don't forget to turn on your notifications so you don't miss any of the new videos. And if you're interested in supporting me, the absolute best thing you could do is share this video with a friend. Alrighty then, let's get started. For those of you who need a quick recap, on July 30th, Apple announced a 4-for-1 stock split. Then, on August 11th, Tesla announced a 5-for-1 stock split. Both of these splits took place on August 31st. I covered this in more detail in my previous video, but you should know that a stock split does not change anything fundamentally about a company. More shares are available at a lower price, so the market cap or the overall value of the company isn't changed at all. Picture cutting a pizza multiple times. There may be more slices, but in the end, it's still one pizza. So with that being said, nothing has fundamentally changed with Apple or Tesla, but something psychologically has. As of August 31st, both stocks appear to be cheaper, even though they're really not. If you only take one thing away from this video, it should be that the stock market isn't always logical. What I mean by that is that it doesn't run purely on fundamentals. There's a lot of emotion in it. Though Apple and Tesla are the same companies that they were last week, their stock splits prompted both stocks to run to new all-time highs. Apple closed the day up 3.3% and Tesla was up 12.5%. To give you a little bit of perspective, since the stock split announcement, Tesla's value has gone up by $160 billion and Apple's value has gone up by more than $750 billion. I know these numbers are massive and are pretty difficult to connect with, which is why I'm sure as an average retail trader, you care more about if you should be buying, selling, or holding. Now, I'm not a financial advisor and we all have very different financial situations, so I can't advise you on what to specifically do, but I can share what I'll personally be watching for next. In the immediate future, I'll be looking for a short squeeze. This is what happens when people who are betting against the stock are forced out of their position, which drives the stock price even higher. As things currently stand, there's over $20 billion bet against Tesla. If these bears decide to cut their losses, the stock can definitely continue to run. In more of a medium time frame, I'll be paying attention to key announcements from both companies. Apple is expected to announce the iPhone 12 this September. Analysts are looking for a physical redesign of the phone and 5G connectivity. If this phone is well received by the consumer market, that would obviously increase bullish sentiment on Apple stock. Beyond that, I would recommend paying attention to the growth in their other business sectors. This would include their wearables such as the Apple Watch and also their services. In terms of Tesla, I'm patiently waiting for September 22nd, which is Battery Day. Many people, myself included, are expecting Musk to announce an extremely long-lasting 1 million mile battery at this event. And on top of that, analysts are looking for improved technology that would lead to greater mile range per charge. Once again, this is happening on September 22nd, so you should definitely expect volatile moves around that time. From a technical perspective, I would not recommend buying Apple or Tesla at these levels since they just made new highs. You should be buying as close to support as possible so you can optimize your risk to reward. Apple trades under the stock ticker AAPL, and at the time I'm making this video, it's just below $130. As things currently stand, the first support would be at $123, which is where the stock found demand in late August. I'm not too fond of this level because it hasn't fully proven itself, so I would be much more excited to buy at the previous resistance of 116. And if you think this recent run is complete baloney, you could target buying at this gap fill from late July at $96. Personally, I don't think the stock getting to this level is likely, but if it ever does, you can be rest assured I will be a buyer. In terms of a bullish target, because I already own some shares of Apple, I'll be looking to take some of my profits off the table at the psychological level of 150. I want to take a moment to stress the point that I plan on only selling some shares at this price target. I view Apple to be a long-term investment. I would be more than happy to hold all of my shares for many years. Tesla, which trades under the stock symbol TSLA, is a little bit of a different story. At the time I'm making this, Tesla closed the day just below $500, and in aftermarket trading, it's at $510. From a technical perspective, the first support would be all the way down at $368. This served as support in mid-August and was also resistance in mid-July. If the bears push the market below this, you could then pay attention to the previous resistance of $338. And if things get really hairy, you could look for a bounce off this area of consolidation at the psychological level of $300, or you could look for the area of support at $273. In terms of a price target where you should be locking in some of your profits, I was going to suggest the psychological level of 500, but since we're already past that, I would now look at 550 and 600. Obviously, you're in charge of your own money, so you should do whatever you want, but I would not recommend arbitrarily buying at these new highs. As quickly as things go up, they can come down, which is exactly why you should be creating your positions around levels of support. Take it from me, someone who's lost a lot of money chasing stocks, do not buy at all-time highs. Overall, I fundamentally believe in both Apple and Tesla, which is why I'm happy to be an investor in both of them for the long run. In the short term, a small decline and consolidation before another run-up wouldn't be completely unwarranted, but a short squeeze could push both of these stocks up immediately, especially Tesla. With all of that being said, please make sure you're paying attention to the VIX, which is a measure of the volatility in the S&P 500. The VIX and the overall stock market commonly move in an inverse fashion. As one goes up, the other typically goes down. The VIX was up over 15% today. If it can break out over the resistance just above 28, it could potentially make a run to the previous resistance just below 34. If this situation were to happen, especially if it runs even further, you could expect a decline in the overall market. I just wanted to quickly bring this to your attention because it could easily have a negative impact on the stocks that you own. If you made it this far in the video, I truly appreciate your support. If you have any suggestions or recommendations, feel free to reach out to me in a comment below. I promise to respond to all of you. My entire goal is to provide as much value as I can. So if you found value in this video, let me know by hitting the like button. And if you want to join the Moon Gang, subscribe to the channel and don't forget to turn on your notifications. Thanks for watching, and until next time, best of luck in the markets.